All right, guys, what's going on? This is Carlos, CEO of GAR Capital. Thanks for taking the time to join me this evening. Hope everyone's joining their Sunday evening. It's right around 7 p.m., April 2nd, 2023. Just wanted to do this video as kind of a hybrid. It'll be both the recap of the quarter. We're going to go over the quarter itself, break it down together, and then we're going to break down the week, upcoming week, see what we're going to look for and what we're expecting. Just keep in mind that this week is a short week. There is Good Friday on Friday, so the market is closed. We have Easter Sunday next Sunday, so you always have that Friday before Sunday, Easter Sunday, as the market is closed. So again, short week, we know the drill. We've done this many times before. We want to watch that risk. If anything, we're probably trying to buy time. But in terms of the market itself, we are expecting seasonally bullish conditions, as we've talked about on the actual market blog, Twitter, and Instagram. Especially the first 4 days of the week tend to be very strong for the month of April, and then we'll kind of just work our way around. But the expectation here is that all dips are to be bought, at least going forward, at least for the week. In terms of support in the S&P 500, I'm looking for right around 4,100 of a retest. Let's go ahead and take a look at that together really quickly. And we'll go over some names together and set up some alerts. Nick is working on the actual watch list for the week, so he'll post that later this evening. But I just wanted to do the video for you guys right now. Let's go ahead and expand my ES setup. And again, here, S&P 500 futures, again, we know the drill. Very, very important. 4060 looking like to be that resistance zone like we talked about 4080. The reason I'm saying 4100 is because of this upward channel. Again, we'll see if we retest that 4100 level, and again, if we're looking for any kind of support, we'll probably be right here, 4080, 4060. If we do decide to get a retest here around the 4100 level, I'm probably looking at buying some calls, or if not, going long futures. Let's take a look at NQ. We played NQ long futures. Again, that 13,000 level being a very, very key level. That's your I believe that's the 20-day moving average, the 13,000. No, it's 12,686, but as I draw on this line many times, you could see kind of this really chopped zone that we've been in really since last May. And then we finally breaking out of that. Now the question is, do we get back to the August highs? And for the foreseeable future, as long as we maintain above 13,000, that's what I expect. So 13,669, if we take a look at S&P 500 futures and kind of use that barometer of the actual August highs, it'll be 43.15, but we do need to break out above the February highs, and I do expect that to come. The break of the February highs get us around to 42, 44, if not 4,300 by the end of April, and then we'll probably reject here as May is seasonally weak. So again, we'll probably get above 4,200. That's a buy area. I don't think we get there right away. We probably get a little bit of a pullback, maybe to around the 4,100 area, but that's our place to reload, and that's where we're looking for some more upside potential growth. And again, 42, 44. Will be our resistance level 2, R2, but R1 right now as we speak is 4,200. And again, that is your February high. That is your year-to-date high. And if we break 4,200, we'll go ahead and play ES or calls up to 42, 44, and then to 4,300. I just don't expect 4,300 to happen this week. If anything, the target we're looking for this week is 4,200. And again, if we pull back here around that 4117, 4110 area, we're probably looking to play a bounce and buy some calls there. All right, let's go ahead and go over the quarter together, guys. Let me go ahead and zoom here. I've had a lot of questions. Again, guys, if you have any questions, you have two ways of reaching me. I do have Instagram. It's verified now through Meta verification. Mine has a blue check mark, and I'm glad we do have it now, just for the fact that we've had so many scammers. I've had someone impersonate me on Instagram. It's really, really scary stuff out there. So again, mine has the blue check mark. You can always DM me. It's a public profile. Please message me any questions you may have about the service, about everything else in the company. I look forward to your suggestions, questions, and some feedback. Also, with that being said, you can always message me on the Discord channel as well. If I don't get to you right away, I have a lot of spam messages. Because I'm in this NFL server. It's NFL Talk, it's called, and there's been a lot of spammy messages there. So sometimes I have to kind of see if this is real or not. So if I don't get back to you right away, you'll know why. So here we go. This is the Q1 2023 breakdown of the whole charts, everything that we've traded this year. The only thing that is not added here are futures and masterclass trades. I'll probably look at those numbers later, but for right now, I don't think the masterclass is really worried about it because we haven't had much. If anything, I'll tell Nick, since he kind of does most of the MC trades, to take a look at that, and then we'll probably get some number out. But I did not do a spreadsheet on the masterclass or the futures, but I'll ask the back office and the team to do it and see if we can get that going. But masterclass, be on the lookout for that. In terms of futures, we really didn't trade futures much this year to begin with. It's been pretty choppy, but we've been getting on top of it now, really doing some really good snipes in terms of futures. The real focus that I have been doing is with the team is that moving those stops to break even. It's very, very crucial that we want to have a risk-free trading, and futures kind of gets you pretty close to it if you can move that to break even. And again, if you're a Forex trader, this is a strategy that many have used before. You could just use it on futures. So here we go. Taking a look at the year again, this number may confuse you a little bit, but again, I want to break it down. The assumption is if you had $10,000, let's just say, and portfolio, no runners. Again, you know the runners are here. Again, we're going to assume that there's no runners taken, and no commission like Robinhood because that's what I use. And you can see you have a $10,000 account. Cancel. And risk per trade is 500. You guys can see it on my screenshots. It's all there, $500 per trade for the most part. If not, very minor deviations, 520, 490. I mean, it all works out at the end. So the first trade of the year, you could see that we did have a loss, worthless, those Apple 120 puts. So again, if you had a $10,000 account, take away 500, you get to 9,500. First winning trade of the year, again, the assumption, of course, is 43%. That's what we got, not the assumption. That screenshot is there. And 210 in profit, it gets you back to 97.10, and then so on and so forth. Again, no runners. You can see 41% is $205. You add that, and this would be the tally moving forward on the assumption of a $10,000 portfolio of you trading. And again, you had about 1, 2, 3, 4, 5, 6, 7, 8 trades where you had some kind of drawdown. The biggest drawdown of the year, again, based on our signals, was the first trade of the actual year. As we move on, you can see how we trade, guys. It really happens in about clusters. So again, you can see that right after that first one, it didn't work out. We had, boom, 5 right afterwards. And then Alibaba didn't work out. Don't get me started on Alibaba. And then one Amazon. And then we had Boeing and JPM that didn't work out. And then the next trades, we had 8 in a row hit. And then you had Q's lost. And then you had 3 in a row hit. And then IWM. So you can notice that it's momentum. And you can see based on this that for the most part, everything that worked was calls. And then towards the end of February, we started hitting a couple of puts, AMD and Netflix. We caught those. We had some clusters here back around the early February where we got to those levels of 4,200 S&P. And you can see those runners. Again, Google, Tesla, Boeing. Tesla, again, Tesla's a great stock to trade once we get to those levels. Palantir, DraftKings, and so on and so forth. Apple calls didn't work out. Again, we had a gap down on a headline due to the New York Post about possible layoffs, or I think it was regarding the contractors that were working with Apple that they laid them off or what have you. Another one here was a hedge for FOMC. We had the 285 puts. That was FOMC day on February 1st. Again, we had it as kind of an insurance policy. It was the only trade that we lost that week. And it was actually in the money prior to CPI. So again, it's important to kind of have context on some of these trades. If we just take that one out, that skews a number big time. The gap down on Apple, again, that happens not against us. Not against us, it obviously hit us, but it's not something that we can control, obviously. Netflix, the 330 calls, the gap filled literally 2 weeks later, so we just got in early on that one. SPY 402 calls was 25% profit, and we didn't take it. And that's hearts on me. And if you guys have been noticing on the Discord, for example, Tesla was saying, hey guys, if you want to take the snack right before the closing of the session, another one was Apple, another one was Meta. Again, because of what happened March 10th when we had that reversal on SPY and Google. Google was 37% and completely reversed on us. So that's something that I'll be looking for towards the future where we start getting really close to 40%. I'll let you guys know, hey guys, if you start getting to 25%, hit that stop or just close. I'm trying to think of a way where we don't have a stop in place, but again, it's a way to kind of mitigate any kind of reversals where we start seeing the action go against us. We'll just close at break even or at 10% instead of getting the loss. But again, with options, you kind of have to let these, in a way, things run and things change right away. Things flip right away, especially in this market. So again, we just have to keep staying consistent, keep our risks low. And again, I'm okay with a little bit of base hits. Those two, I should have taken those base hits. That starts with me. But again, if you notice, I'm focusing on what didn't go well so we can turn that into positives into the next quarter. And again, another cluster, another 5 trades that hit. Microsoft, we had a premium burn at the bell, the stock tank. That happens. Bank of America, 27.5 puts. This was this week. This week was the toughest one because we were very green for the quarter in March. But the last week kind of hurt us because of these 3 trades. Bank of America, I was expecting, we hit Bank of America puts the Friday before this month, the Monday that just passed. And I was looking for a reversal, meaning a pop higher, and I wanted to fade it and to fill that gap. We never got that gap fill. And that's what happens. Amazon, we were about 20 cents away from target. We were 10% profit. On Tuesday, overnight, we soared. Same thing with Apple. Overnight, we soared really out of our hands. The good news on Apple is that we got back in. We played the 165 calls. We got 40%, so that helps a little bit. Tesla, my goodness, that one was on fire too. That was a quick one. If we would have just done, to the point of playing it sooner, but we were trying to get under, believe it was the 199 level that we were looking for. And it was a level we were talking about on the morning note often. And we finally got that break. And then the momentum just kicked in. Meta, we opened at the same time with Apple. That was the Thursday before this past Friday. Hit 33%. That's when I closed it. The option to close, I told everyone 18% if they wanted it. Again, this is us learning from our mistakes. I'm not perfect. But again, the idea is to get you guys in the right methodology of taking those base hits, taking those hits over time. And you can see, again, guys, you don't need to hit home runs every trade. You could see a lot of these gains, 40, 30, 48, 45, 40, some are 13. And then if you accumulate this over time, even with the losses, again, you could see the losses are accumulated. You'd be up 28%. But again, this is the assumption that you got in when we got in, and sometimes cents can deviate, and the exit. So if you're someone that is in our service and sometimes it doesn't get the entry correctly, that's okay. I'd rather you sacrifice a couple of cents, get in, and just get out at when we get out, which is probably like a 30, 35%, because even that accumulates over time. So again, let's keep the idea that any profit is good profit over time, and we want to make sure we don't get anything wrong. And it's okay to be wrong, but it's bad to stay wrong. The problem is the reversal. So again, we're really gonna rethink ourselves what we're looking at in terms of risk going into a weekend, like we had this weekend, no risk. Going into a major event, we want to make sure that we have the risk in check. We're not too heavy on one side of the fence, whether it's short side or call side. And again, we were on the short side. We got hit on an overnight bounce, but that's what happens. You reverse it. Then you take a look at what's the market telling us. And then what do? We change our directive, we change our perspective, and we went ahead and hit calls. And I mean, guys, the facts change, things change every day. We know that prices change. So I'm pretty proud of the consistency for the most part. Really, if we take away, a couple of trades that were reversed on us, we'll understand that happens. But you're talking about 3, one of them was an insurance play or a hedge. 2 of them were green. So if we take away those 3 and understand that we would be at 48 out of 59, that would pretty much get us at 80%. And I want to make that clear that 80% is really the target I'm looking for every single week. 8 out of 10 trades need to be green. That's my number. Anything above that is cake. Anything below that, I am not happy. So this past week was not that. But again, we got hit right away. You could see with these trades here on Monday and Tuesday. And Apple reversed, Amazon reversed, and Bank of America never filled its gap. But we came in towards the tail end of the week strong. We got Tesla, we got Apple, we got Meta. AMD puts worked out for us same day. So again, we're never out of the fight. The way I see it is that, if the market's open, we got an opportunity, we got a chance to trade it and see where we go from there. The one thing that stands out here is that I definitely want to get some more overnight gappers. This is where it really helps in terms of the portfolio. We've had that last year where we were getting 115% on an overnight gap because of some movement overnight, and we're on the right side of that. I would want more of those moving forward, so we can start kind of adding a little more juice to our trades. But so far right now, we've been trading what we've been looking at, trading the tape, and I'm very proud of the work we've been doing. But the number of my barometer is 80%, and we've had a couple of 100% weeks this quarter, and I'm very proud of that. But again, our barometer is here. We're doing great, but we can do better, and I think we can, and I think we will moving forward. But I just wanted to show you this, guys. If you wanted to go and take a look, feel free to take a look on Discord, and that's our breakdown of the quarter. It was a great quarter, and I'm very proud of the team. Let's go ahead and close out of here, and let's take a look at a couple of names that I'll be watching for this week. We'll go over 5 of them. Why not go with the one that worked with last week, which was Tesla. Tesla reported the deliveries. We don't know if that's going to be a net positive or a net negative for the stock because the market's not open. If it is a net positive, we're looking at possibly the 210 level as a break, and then we'll be taking a look at the 215 to 220 level. 215 being your 200-day moving average, and in terms of resistance, at least based on the chart, if we break above that, is right around 225. If you guys remember, we do have the 220 calls as a runner. So again, it's not something that we need to jump into immediately. But again, 210.81, that's the next target we're looking for. If we break above that, we'll start taking a look at possible more upside calls to 225. If not 220, maybe we can re-enter or maybe take a look at a strike a little higher, 225s. Moving forward and maybe buy some time. But again, we'll take a look at that as we go. Let's keep the alert at 210.81. That's the same level I talked about on the watch list and charts. We did hit Apple. We closed out of that, and I did not have a runner. Take a look at Apple. We're starting to break above this very key downside downside resistance or downside trend line. The good news is that we do have a little more room to go if we consider that break. Our level is 171.16. That is a gap to fill from the August levels, the August highs. If you guys remember back on the S&P 500, we just talked about it. So what is a level that we're looking for if we want to go ahead and play that level 171? Well, you could do one or two options. You could do 167, excuse me. If you do 167, pretty similar resistance here from back in May. You can see that was pretty much the slice level that we had once we had the drop in August. But again, 167, if we play that, we'll probably take a look at the 171 calls on Apple. We'll keep an eye on it. Now we do have a gap to fill on Apple. If we fill that gap, that's a possibility to reload for more upside as we have golden crossed on Apple, as we have golden crossed on NASDAQ across the board, pretty much all tech. Let's go and take a look at Qs. I know it's a very tech-centric situation here. In terms of next resistance, you're talking about 323. You can see NASDAQ is down a little bit. There is no gaps to fill on the daily, but again, if we're looking to reload, let's keep an eye around the 313, 315 level. We'll go ahead and zoom in a little bit to the 4-hour chart and see where we can get in here. So we have this wick here right around 315.21. If we retest that, we may want to go back and go long again and see if we can retest 320. Let's go take a look at Google here. Again, I'm focusing on tech because that's the thing that's been moving the most. So we kind of just want to hit what's been working and not, deviate from that. In terms of resistance, really, I'm looking at 105.08. If we can break that, then I'm taking a look at the 107.5 calls. If not the 108 calls, that's a possible double top. If we get there, I have the 108 level as the target. So again, we want 105.08 there. Let's see, AMD, semiconductors have been moving relatively strong. $100 level is a very key level on the 4-hour chart. In terms of support, it's kind of difficult to call it here. 92.91, if you remember, we shorted to the 92 level. Let's see if it retests that. If not, if we break above 100, that's going to give us an opportunity to take a look at the stock for a little more upside move. If we go to the daily here on AMD, let's take a look at it. Okay, it's running a little slow. Here we go. And you can see very similar to the S&P, kind of that August highs. So if we do break above 100, we can take a look at possibly the 104. If not, the 103 calls. So that's AMD, Google, Apple, Qs, and Tesla. So there we go. And then Nick will go ahead and send out the watch list later this evening to the Discord channel. So there we go. So pretty good quarter. I'm very satisfied. I'm very happy. I'm very excited. And I'm excited for what the second quarter brings. In terms of seasonality, we expect April to be very strong. We do have the month earnings coming in, banks will be first. In terms of what's going to happen economically speaking, or economic news, again, it is a short week. We do have ISM manufacturing PMI at 10 a.m. You have the OPEC meetings. Oil did jump this morning, but again, or this evening, I'm about off the highs now, about 6%. We'll take a look at crude oil futures. We'll take a look at the pre-market moves on these oil companies. Again, we don't want to jump on the first move either. ADP private non-farm employment change is on Wednesday. ISM PMI on Wednesday, unemployment claims. And then we have the non-farm payroll report on Friday. But the market is closed. So not like we can react to it in terms of futures anyways. So I believe futures should be open on Friday. I'm not really sure. But I don't expect us to have much risk going into the Easter weekend. But at least in terms of seasonally speaking, Monday, Tuesday, and Thursday is pretty bullish. So we'll just see if we get a little bit of a pullback, maybe something we can play, something we could trade moving forward. But I'll keep my eye on the S&P 500 futures as usual. Maybe we can play some futures longs if we get a pullback and maybe buy it. And you can see here on NASDAQ, NASDAQ is trading great. Could it get overextended? Sure. Let's see if we can buy the dip. As long as we get to 4,200 by the end of the week, I think we can buy the dip moving forward. Let's see what we get, guys. Have a great rest of your Sunday. I will catch you guys tomorrow for the morning note at 9 a.m. Eastern Standard Time. Cheers.